Hi everyone, in this video let's take a case study related to NISM certification on Investment Advisor Level 1. We will first understand the case and then answer 5 questions related to the case. So let's start. So Mr. X and his wife Miss Y both work in the IT sector. The monthly income and expenses of the family is as follows. So here we have Mr. X, Miss Y and the total for the entire family. So we have net monthly take home salary, contribution to PF, tax deducted on salary income. We have interest and dividend income for Mr. X as well as for Miss Y, and then the total for the entire family. Then we have the expenses for the entire family, which is the household expenses, house rent, fees and education of children, transportation, utilities, lifestyle, entertainment. And then finally, in the last row, you can see monthly investments, the committed investment for Mr. X and Miss Y. Yeah, so this is the information we have, and based on this information we will now answer 5 questions. So let's start with the first question. What is the monthly surplus cash in hand for the family? We have 4 options here, and this is the information which is already available with us, right? So using this information we have to answer. So to answer this question, we need to first identify what is the total inflow of cash with the family, which is the income, which is the net income that the family is getting, and then from this we have to deduct all the expenses and the monthly committed investments. Okay, so the correct answer here is A, which is 32,000. And how we got this 32,000? So the calculation is like this. So first we have to find out what is the net family income, which is 1,25,000 for Mr. X, 1,10,000 for Mr. Y, and then to this we are adding the interest and dividend income. Remember, we are not looking at contribution to PF and tax deducted on salary income here, because we need to see what is the net cash or net money that both Mr. X and Miss Y are getting here, right? So therefore we are only considering net monthly take home salary. From this we have to deduct the total expenses and the investment for which there will be cash outflow, right? So the total expenses, which is total of all the expenses and also the committed investments of 35,000. Once we deduct the total expenses from net family income, we get monthly surplus cash in hand, which is 32,000. Okay, moving to the next question. What is the total monthly savings of the family? So again we have 4 options here, and this is the information. So to calculate the total monthly savings, what we need to do, we need to see what is the total investment and the surplus cash that the family has. Okay, so here the correct answer is D, that is 1,10,000. And how we got this? Let's see. So first thing is the PF contribution. This is the compulsory saving what we have, right? So we are taking PF contribution of both Mr. X and Miss Y, that is 43,000. To this we are adding monthly investments. So Mr. X and Miss Y, they are contributing monthly, right? So which is 35,000. And to this we also have to add the surplus cash what we calculated in the previous question, right? Because that is the surplus cash which is available, that can be invested, that is also a saving, you know. So therefore we get the answer as 1,10,000. Okay, the next question is savings ratio for the family is dash. Again, we have 4 options here and the information. So using this information we can calculate the savings ratio. Now to calculate the savings ratio we need 2 things. We need the total savings and we also need the gross income. The correct answer here is C, that is 33.9%. And how we got this? Let's see the calculation here. So savings ratio is equal to total savings divided by gross income. So total savings, as I said, we computed in the previous question, that is 1,10,000, and we divide this with the gross income and we get the answer as 33.9%. Now gross income, how we can calculate gross income? So it is the net monthly take home salary plus the PF contribution, because from net we are now moving to gross, so therefore we are adding this PF contribution and we are also adding the tax deducted on salary income. And to this, when we add interest and dividend income, we get the gross income for the family, right? So the gross income as computed here is 3,24,500, and we got the answer here as savings ratio of 33.9%. Okay, so let's move to the next interesting question. Miss Y is planning to leave her job and start consulting assignment, where she is expecting at least net income of 30,000 rupees per month. As an investment advisor, what will you suggest to Miss Y? So we have 4 options. The first option is she can leave her job as the consulting income is enough to meet the total family expense. She should leave the job if net consulting income is at least 35,000 per month to meet the total family expenses. She should leave the job if the net consulting income is at least 41,000 per month to meet the total family expenses. And the last option is she should leave the job if the net consulting income is at least 43,000 per month to meet the total family expenses, right? So we have to do the calculation again here. And what is the calculation? So first we need to see what is the total income of the family if Miss Y leaves the job, okay? And then we will compare this income with the total expenses of the family and identify what is the deficit, or what is the money that needs to be earned additionally, okay? So here the correct option is D, which is the last option. And why? So let's see the calculation. So net monthly income of the family if Miss Y leaves the job is 1,25,000, which is the net take home salary of Mr. X, and then we will be adding the interest and dividend income for both Mr. X and Miss Y, because even if she leaves the job she will still get the interest and the dividend income what she's getting, right? So so this is 1,30,000. The total monthly expenses of the family, if we add up all the expenses here, it comes to 1,73,000, okay? So the minimum net consulting income Miss Y should earn to meet total family expenses is 1,73,000 minus 1,30,000, which is basically the difference between the income and the expenses, and that comes to 43,000, and therefore the correct option is D. Okay. Okay, moving to the last question. What is savings to income ratio if the family has accumulated investments including PF balance, value of bank deposits, mutual fund units, PPF, NSC, etc. of 45 lakh rupees? And we have four options again, and the information. So to calculate the savings to income ratio, we need two things. We need accumulated investments, which is already mentioned here, and we also need annual gross income. Now if you recollect, in question number 3 we already calculated the gross income. We just have to annualize this by multiplying 12. Okay, so here the correct option is C, which is 1.16. so savings to income ratio is 1.16. Now how we got this? So savings to income ratio is equal to accumulated investments divided by annual gross income. The accumulated investment already mentioned here, 45 lakhs. We have to divide this with annual gross income, and as I said, the gross income we have already computed, which was 3,24,500. We just have to multiply this with 12 and we get 38,94,000. So this is the annual gross income, and if we do this calculation we get 1.16. so savings to income ratio is 1.16. This completes the case study, and if you find this useful, please like the video and subscribe to our channel. Thank you.